This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending October 1st, 2022. Our question this week is, what is liquidity? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.71% on Friday and was down minus 2.92% for the week. The S&P 500 decreased minus 1.51% on Friday and was down minus 2.91% for the week. The Nasdaq decreased minus 1.51% on Friday and was down minus 2.69% for the week. Looking at the week, we can see that there were 11 down finishes versus 4 up finishes for the major indexes. On Monday, all the major indexes finished down. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Wednesday, all the major indexes finished up, but on Thursday and Friday, they all finished down. The new unemployment claims were 193,000 versus 215,000 estimated. The sterling pound hit a record low against the U.S. dollar. The 10-year U.S. Treasury yield rose above 3.75%. Mortgage refinancing dropped to a 22-year low. Home prices cooled in July at the fastest rate in history. And the Fed's core inflation rate rose 4.9% from a year ago. New unemployment claims, the sterling pound hitting a record low against the U.S. dollar, the 10-year U.S. Treasury yield rising above 3.75%, mortgage refinancing dropping to a 22-year low, home prices cooling, and the Fed's core inflation rate rising 4.9% are all news, and news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is liquidity? Liquidity is the efficiency or ease in which an asset can be converted into cash without affecting the asset's market price. Liquidity is applicable to companies and to the stock market. Stocks can normally be converted to cash rather easily. Companies have assets that can be converted to cash. Some of these assets are more liquid than others. Liquidity for a business is important because it indicates how much money the company has available to spend and or invest. The higher the liquidity, the more money the company has to meet the demands on cash for normal business operations. For example, you can't meet payroll if you do not have the cash to make the payments. Cash is, of course, the most liquid of all assets. Stocks are fairly liquid because you can sell stocks quickly with a push of a button. With a push of a button. You may not get the price that you want for your stock, but you can sell your stock holdings quickly. Stocks are pretty liquid. However, not all stocks have the same level of liquidity. Some stocks are more liquid than others as there is higher demand on some stocks than there are others. Other assets like real estate are not very liquid as it may take a long time to sell a house, an apartment building, or commercial property. Art is also not very liquid, even though art may be a good investment, but you may have a difficult time selling it back into the market. Do you have liquid assets? How liquid are your stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending October 1st, 2022. The strongest performer on the list this week is Riot Blockchain Incorporated, ticker symbol RIOT. It's in the third column. It decreased minus 1.13% on Friday, but it was up 10.74% for the week. Riot Blockchain is a U.S. cryptocurrency mining company. It primarily focuses on Bitcoin mining. It has at least 7,000 miners. The company has several subsidiaries, and through its subsidiaries, Riot Blockchain also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Riot Blockchain holds a 13% share of a digital exchange company in Canada, and it holds investments in a company that provides cryptocurrency accounting and audit technology services. Looking at a summary of results, you can see that Riot has decreased minus 68.61% year to date. I did not trade or generate cash flow from Riot this week, but I have in the past. Riot has been on the best performing list several times so far this year, as cryptocurrency has again been extremely volatile. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 6.49% versus minus 24.8% down for SPY, a difference of 18.31%. The Southside is beating SPY by more than 18%. The cash flow generated by the Southside cash flow system for this week was 9.62% of the portfolio account value. The account value changed by 2.76%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.93%. Bitcoin Watch. Bitcoin gained 1.5% this past week, but it continues to be in a bear market. It is down almost 72% from its all-time high achieved in November 2021. I sold option contracts on 3 positions this week. All 3 were calls that ranged from $50.69 to $90.69. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 is for beginners, level 2, intermediate, and level 3 is for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.